Hello, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Tuesday, the 13th of August, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember to switch your viewer to 1080p on YouTube. Unfortunately, Periscope is limited to 720p, so the picture is going to be a little bit fuzzy. Can't do anything about that. The medium's not there yet. This is episode 1573. Thanks for joining. Yesterday, as I had talked about at length, that 2893 is a really big key area. That was the small four-tick gap zone, and it's the low volume node in between the two major distributions when you go and accumulate the profile, the volume profile into what we call a micro composite profile. And a break below there is likely to take us down to 2854 as the key target. Now, we broke through today. We pushed into 2866. We do have some fairly negative news out of Europe. In case you weren't aware, the ZOO number, the economic sentiment number out of Germany, a major indicator for the German economy, came in much, much worse. It came in at negative 44.1 versus the expected negative 28.5. The ZOO number for the Eurozone was worse, came in at negative 43.6, expected at negative 21.7. Pretty bad. So as you can imagine, the DAX, the DAX is really leading the selling today, down 127 points or 1.09%. We did get the core inflation number at 7:30 Central, 8:30 Eastern, about a half hour ago, and that came in inflation uptick to 0.3 from 0.2 expected month on month in July, and we saw a reaction in the treasuries there. It's just, if you look at the overall picture, I've been since we had Ira Harris on our anniversary at Convergent Trading's anniversary show. I've been paying particular attention to macros, listening to really good broadcasts, macro voices, odd lots, and things like that. And there's just a lot going on in the underlying. Now that I'm not allowing that to color my trading because the time frame those guys are referring to is much, much higher than mine. But really, we got to pay attention because there's potentially, I'm not sure, potentially there's a lot of decay in the underlying foundation when you look at the bigger numbers, the macro numbers across multiple economies. And that is, of course, exaggerated by this TV drama type trade war where things are going well, but we're not going to meet. We might cancel our meetings. We'll see if there will be a deal. No, we're not looking at a deal with China. They're a currency manipulator, and it's just back and forth, back and forth. And remember, the market really, just like nature abhors a vacuum, the market abhors um, uncertainty. And the way it reprices uncertainty is to move to safety assets. And therefore, gold is leading the pack today, up $15, trading at $1,532.10, up 1% in gold. A lot of buying been going on in gold here this year. Pretty strong uptrend. The bonds are only up 3 ticks. The Bund is up 23 ticks. And interestingly, the treasuries are down 5.5 ticks from yesterday's settlement. But overall, the allocation is to safety. It's very clear today after a selling day yesterday. Yesterday almost turned into a trend selling day. And that's where we are. That's the overall picture. Okay. Looking at what's ahead today, we've pretty much cleared the deck in terms of the key figures already. We do have API crude stocks at 4:30 Eastern. It's about 15 minutes after the pit close. We get the Westpac consumer confidence change in Australia. That comes out at 8:30 Eastern. And then China releases its fixed asset investment, industrial production, and retail sales all at 10 p.m. U.S. Eastern U.S. time. Let's take a look at what we expected yesterday versus what we got in our review segment. Here's the primary scenario in green. The primary scenario was looking for some sort of return reversion, and it could, remember, I went through the liquidity yesterday. And by the way, for those of you who may or may not have been here, I went through the liquidity, and here's what the liquidity picture looked like. The green here is the last print. The dots are just 50 or better, maybe 100 or better. Let me see. There are 100 or better prints. And I talked about liquidity down in 28.90, which was long term, and then some strong liquidity at 28, 28, so 28.90 and then 28.85 through 87 and above at 29.10. That was pre-market, right? This is just to kind of give you the kind of a framework for how liquidity is important. And you look at how we traded yesterday. This is the 15-minute. I'd love to pull up the Renko, but it's been a busy market. So here, I'll squish it a little bit for you. But you can see, remember, the liquidity was at started out at 29.09 and went through 29.10. And here's the market turning at 29.08. So we get the reversion back into the range. And remember, I drew a green bar from about 29.10 to 29.12 or so, something like that. 29.12 to 29.15 or something like that is an area to look to get short. It stopped well ahead of that. The liquidity was at 29.10. This is why I pay attention to it. And I was looking for a rotation down. And the first area that had liquidity was what? 28.90. 28.90 is where we kind of pushed in, squeezed a little bit, 28.90, and then below that we had liquidity at 28.87, 28.87, 88, 86, and that's basically the turn that liquidity actually traded through. That's the turn. We come back, we tackle that liquidity again, whatever's left, and once we break through, we get our biggest rotation of the day down. This is why, it's not just random that I'm pointing these things out, things like liquidity in the book and things like that. So CT Bookmap, very, very useful in that sense. Not only do I execute on it, but it just helps me map out the higher potential turning points. Also, it helps me front run some areas if I see that the liquidity has been sitting there and it's really huge. In other words, I look at the map and I see it just protruding quite a bit, and the market really having a hard time moving up to it. But what we got yesterday, let me back this up, back the thing up. What we got yesterday was the expectation for a turn in the 29, 10, 12, well, 12 to 15 is what I plotted out. 29.10 was outlined by the liquidity, and a fall out of range. We were opening in the lower high volume node, so expected an open auction there because there was acceptance there the day before on Friday. But then I looked for a push into 28.78, below that 73, below that 28.66.75. Here's what it actually did. We get a small reversion back, again 29.08ish, and it breaks down, pulls back, and then pushes. Where does it push to? 28.72. So 73, I didn't move the stock zone. 73 was one of those stock zones. 28.78 was a stock zone that was up here. I removed it. It's already been tested. And it's just almost a picture perfect scenario one play there. I was looking for 78. Where is that? 78 right here. 78 was the key target below. Okay. It bounced right off of this 73 area, and there are some key areas below there. 2866, which was the next area down, and that turned out to be on the nose. 2866.75 turned out to be the overnight low. Beneath there, we get to our key target, the key lower distribution target on the MC, which was 2854. We have a naked point of control, 2855. So here's a question. How many of you are completely lost by what I just said? If you are, it's okay. Just keep coming back. It'll become clear over time. So that's the review of yesterday. We've basically topped out. What we've created here is a topping formation. Okay, we failed to push all the way back in. We did get back into the Friday, the zone from 2 Fridays ago, tested that on a trend day up last Thursday, and on Friday was an inside day, and then we rotated down yesterday to what looks like a continuation of the impulse down from a couple of weeks ago. So that's what's up. If you don't know, now you know. Um, Overnight, pull right back up. The key area to test was the 88 and a quarter, went to 89 and a half. To 89 and a half, pretty decent test here. And then it just holds steady, sells off on the zoo, on the European Open, sells off on the zoo right here. And then we are staying below the mid VWAP. We're in the point of control where we went lower than yesterday's low, looking kind of weak. A two distribution profile, pretty uneven. So we have two distributions here, pretty uneven, and the volume is outstanding, 394,000. I expect that we're likely to continue to get higher volume through the session. I expect it to be a relatively active session this morning. But we're continuing to push lower, and the market's likely to continue to push lower until what? I can't wait for your answer. Until it finds buyers. Markets advertise or auction lower to seek buyers. They show lower and lower and lower prices to find the opposing force. The opposing force, when we go lower, is buyers. Once we get buyers, if we get an excess low, then we are likely to push as high up as we need to entice sellers again, and then we end up looking for value in between those spots. And then the market's likely to stick with value until a new input comes in, like a tweet or something. And once the new input comes in, it reprices and looks for sellers. When it pushes higher, looks for buyers when it pushes lower. That's basic market auction, the basic market auction process. And it's really important that all traders of all kinds understand it. It doesn't matter if you're a fib trader or not. It's really important. It's really important to look at or to understand how prices are auctioned. Let's take a look at the liquidity real quick on ctbookmap.pro. On ctbookmap.pro here, and some interesting artifacts from yesterday. So we reopen, we push up, as you can see here, sell off on the right on the European Open, sell off again on pretty decent volume on the zoo figure, and then we have this really large collision. As I zoom in here, we get this pretty big bid that was sitting here at night for about 1300 right here. It shows up right before 7 o'clock Central and into the CPI number. To me, this looks like a hedge being put on. That's what it looks like. It's just a big deck that's laying here, and then the market collides right into it. You can see the print here is quite large, 1100 traded on this from there to there. This is a VWAP of all the fills, so it shows up a little bit below. But overall, that completely trades out, and then we bounce above, as we often do on a collision. So this is what I call a collision here, when price and liquidity come together. And then that size steps right back in with 1,400 more. And then they trade out. Basically, it's not showing all the fills, but they trade out. But there's a collision here at 810, and then we start to move up. This area here, 2870, you might want to pay attention to it throughout the session today. It is likely to play again once the market opens. And that's what it looks like. Let's switch this over to a color map. Where's the liquidity? Find Waldo, right? Where's the liquidity? Pretty clear up to 2880. That's the closing print from yesterday. So it's likely to continue to drift here. The next liquidity set is down at 2859, and you notice there's a big contrast to what we saw yesterday, where there was a lot stacked. Even if I change the contrast and pull in all of the liquidity, it doesn't really show us more. So what we have is 2880 through 82 above, and then below, the liquidity that's been sitting there for a while is sitting at 2862 quarter right here, and then 2859. Remember, 2854 is the key test area below, and that's how things are shaping up. One more thing, yesterday, all of that effort on the in the market. Whoa, hang on. All of that effort, and this is the market profile chart here. We opened right there on B period. We tested up, we tested down, we tested up. C period extended B period, and then D period did not extend C period, and it started to look weak. We opened up, and then we finished to the downside. E periods below that extends lower, and so on. We have one time framing up. In fact, I can split this profile to show what that looked like. You can see that C really engulfed B period. This is the second 30-minute bracket. So this is from 10 o'clock till 10:30, and then we get this inside. The third bracket's inside. The fourth bracket starts to break lower. This is when we start to look really, for those of you who wait, this is when you start to look to the short side. But what's interesting here is all of this effort yesterday, and they could only leave a 3-tick single print down at 28.85, 75 down to 28.85 and a quarter. Just paying attention to that set of singles just above. This is above the liquidity area, but it's if you have Bookmap and you're with Convergent, then that's marked in your cloud notes, and we'll update those throughout the day. But this is interesting how we finished yesterday. We finished with a nice push lower in L period, and then we rallied back up and started to build a high volume node near the lows. Let's take a look at today. I'm running out of time here. I'm going way over. What's today's plan? Now it's Tuesday, historically a more volatile day. So the first thing I'm going to do here is include yesterday in the composite. So we want to watch this yellow composite get filled in. Remember, yesterday 28.93, this area was key right here. Okay, I'm going to fill that. The market traded that pretty well, and it starts to fill in. You see it fill in there. Okay, and we shift the point of control up to 28.83 because of the volume we had at 28.8350 yesterday. But still, the lower distribution right here. You look at this area right here, and it's got. Let me clean this up for you. You see that point of control right there, point of control right there, point of control right there. These 2 points of control right on top of each other. That's the expected test area, 2854 down below. And so what are we looking for today? On the primary scenario, we are right on the edge of yesterday's trade, yesterday's range. I'm looking for an open auction that sells off, sells below. I'm looking for it to come back in, push higher, start to push and squeeze into that 2890 area above before it settles back in and starts to potentially push lower. I'm expecting pretty good range. I'm expecting two-way trading. I'm expecting interest on both sides to kick in today. So it's going to look kind of confusing. Remember that. It's not likely to be directional today. The prices have moved low enough into the lower distribution here to likely entice some buyers to come in early. The secondary is an open auction that pushes higher into that high liquidity area into 2890, impulse down out of range, takes out the overnight low, and then starts walking itself down to 2855, 54 to rest here before it pushes and consolidates in this area. I'm expecting both of these scenarios have about an equal opportunity of playing out. Whereas yesterday I was pretty confident in scenario one playing out. I mean, it had all the trimmings for a selling day, but today it could really go in either direction. But what I'm not expecting is for it to push back above 2900, above 2902 or so. I'm expecting it to get tangled at 2900. If it pushes above 2900 this morning, we could be in for a squeeze and we may see 2919. So that's the tertiary. The third scenario here is an open test drive up, push into 2900, and then really squeeze them up to 2919, 2920 as the play there. And that just tells us what that'll tell us is, hey, buyers have stepped in, buyers are seeing value here, and we are done for the short term. We're done on the sell side. Okay, that's all I have for you. Good luck today. Remember, if you're a Convergent member, we have our trade talk today at noon Central, 1 Eastern. I'll catch you there. Take care.